Good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comment for Monday the 13th, 2025, Columbus Day. Banks are closed, low volume. Highlights of the day, new contract highs in cattle. We'll get to that later. A little bit of a recovery in the lean hogs, but hogs have been under pressure as of late. We got to get back to taking a look at what's going on with the row crops. December corn, um, retesting 410 and a half, settled at 10 and 3, 410 and 3/4, down 2 1/4 cent. It looks like we are in danger, kids, of possibly going down and taking out 1003. Excuse me, I wish it was 1003. My goodness. 403 and a half, which was the August 28th low. If that fails, that opens up a test of the contract low at 392. So you don't have to be a math major to see that 410 minus 392. It's roughly 20 cents worth of risk still. So now is not the time to have 40 or 50 cent corn puts on the books. Now's the time to have 4 or 5 cent corn puts on the books because there's only 20 cents worth of risk. Um, don't be sitting there with really expensive corn puts, because if for some reason we do get recovery, you want the cheapest put possible to go worthless, not an expensive put. November beans finished up a penny, but that was after a 10 cent whipsaw trading range. Finished at 1007 and 3/4. We are getting to the time where these November options are going to be expiring. The risk is if we take out the low from last week, which is right down around 993. If we take that out, that opens up a whole can of worms. We could probably go down to 971, which was the April, the low of the year for April. This has been a weird year, 2025. Two times we tested 1075, and basically two times we tested the 970 level. This last time in August, we tested 983, but basically we've only had $1.04 trading range all year to work with. 1023 was a very big level. We danced around there last week. And if you've been getting my letter, if you're not signed up for my letter, I do the daily letter every morning, talk about key pivot, key levels, not because charts are perfect, not because technical analysis is perfect, but because they give you an area to watch to do what? To make a decision. Now, if you're a farmer producer, you are a commodity trader. The only problem is you're bet long forever. You are long all the bushels that you've got in the bin, all the bushels that you've grown this year, and all the bushels that you're going to grow for the next 10 years, 15 years, 30 years, depending on how old you are. So you are a commodity trader, but you are trading with one hand behind your back, which is why when I work with my producers, I always have to remind them of that. You may say that you despise commodity traders, but guess what? When you look in the mirror, you are a commodity trader. Now, you don't have a day-to-day risk like somebody who's sitting there with $1,000 in their trading account trying to turn it into $1 million. You've got a much bigger risk, which makes it all more important that you have a risk management plan, you have a marketing plan, and you also have a longer term outlook as to what you're doing with the bushels that you haven't sold that you need to sell yet. And that's exactly what I built my program on. My background. I spent 18, 19 years trading on the floor of the Board of Trade. And then the last 15 years, I've worked with farmers and producers. Honestly, I would still be on the floor probably if the floor hadn't gone away. The entire mechanism of open outcry fizzled away at about 2008, 2009. It all went computerized. But the reason for the existence of the Board of Trade has not gone away. These people that you love to hate will take the other side of your risk. The problem is you've got to be willing to give them the other side of your risk. So that's exactly what I do day in and day out. I work with not only farmers and producers, but I do work with end users. People out there that they're happy when the price of corn and wheat goes down because that means they're paying less for their inputs. So everybody's got risk. Commodities do not trade like the stock market. They trade their own animal, so it's a completely different way to really look at the world, especially if you know that. But if you take nothing away from listening to me, just recognize that if you're a farmer producer, you're a commodity trader. Problem is, you have one hand tied behind your back, and you're always long. That's why it's important for you to have a plan as to how to manage risk, other than just saying, "Well, I'll store it and we'll see what happens." Because in years like this, you can leave a lot of revenue on the table, and certainly the revenue drop that we've seen in the last 3 years has been pretty painful for a lot of guys. Um, but yeah, I mean, we've had an 80-cent slide in corn in 2025, and we've only had a dollar trading range in soybeans for 2025. And anything under 1020, we're kind of underneath the midpoint of the year. We're sitting right here today, again, right around 1007. I think if $10 fails, that's going to be a big emotional stress level for a lot of farmers and producers. And again, we're dealing with the flat price. I can't do anything about your basis. Your basis is the whole second part of your risk. And what is your basis? You'd be surprised how many guys don't really understand that. The basis is the difference between what the Board of Trade price is on the board and what whoever buys your grain will give you. Elevator, ethanol plant, whatever have you. So the difference between the futures price and what you can sell your product for, that is the basis. Generally, it's under the board. So that's another thing we have to deal with as we're looking for our marketing ideas. Moving on real quick, I'm already starting to look at 2026. 2076 corn, these corns out there at 452. You've got new crop soybeans for next year. And yeah, we're already looking ahead. I know some of you don't even want to talk about 2025, but we're already looking ahead to 2026. And if you look at 2026 beans, they went off today. Let's see. Yep, right at 1058. So we're sitting at 1058 Nove 2026 beans, when Nove 2025 beans are at 1007. So there's 50 cents worth of carry there. I don't want to be sitting in a situation next year where we come to harvest next year and nothing was done at 1058 because that wasn't a good enough price for you. So we're already looking ahead for 2026, kids. In the wheat continues to just try and find a bottom. Both Kansas City and Chicago wheat, new contract lows. East Chicago hit 494.5, settled down 1 3/4 cent at 496 3/4. Kansas City wheat hit 479.5, settled at 481 1/4, down 1 3/4 cent. Minneapolis wheat finished down 2.5 cents at 551. And again, wheat is just under pressure, and that's a whole other ball of wax. If you're storing wheat, please keep a hedge on that wheat. And yes, there is still downside risk. Take a look at my weekly wrap. I do a really long-term outlook, and I throw in the long-term charts. So when somebody says, "Well, why do you think there's 50 cents worth of risk in wheat? Why do you think there's 50 to 60 cents worth of risk in soybeans?" It's just based on long-term charts. And guess what? We do not have a fundamental story out there. We don't have a weather story. We don't have a demand story that's positive. So we are stuck trading technical levels, moving averages, the stuff that people love to hate. And trust me, I've been in this business for 30 years. I hate trading technicals. It's mind numbing, but they do matter. And I dig into a lot of that. A lot of what I do is based on charts. Why? Because I'd rather see you look at a picture than listen or than read 1,000 words about what someone thinks. If you look at that picture, you get a visual and you can see, oh, this is what he's talking about. This is the old low he's talking about. You can learn a lot if you just sign up for my letter. Okay, moving on to the livestock. Again, probably the silver lining, right? These fat cattle hit 245.125, new contract high, finished up the day 244.750, up 2.25. November feeder cattle hit a new contract, an all-time high, 378.45, settled at 76.72. Certainly, we're going to be talking about 250 fat cattle and $4 feeder cattle now, as just like the old Sonny and Cher song, the beat goes on, cattle keep going higher. The stock market recovered a little bit today. I mean, if you were very upset on Friday because we had a 4% correction, okay, we had a 1.5% rally today. If you can't stomach a 4% correction in the stock market, and if you call a 4% move in the stock market a crash, you really need to educate yourself. Um, Anything less than 5% is noise. 10% is a normal correction. 20% is a bear market correction. And heck, we just had a 20, almost a 20% correction back in April. It was around 19% turnaround, and then we screened higher, and we've recovered all of that. Plus, if you take the low of the April move in the S&P to the recent all-time high, it was up 40%. Now, I know people love to point out the fact that nobody buys the low and sells the high. I get it. It is just a math problem, though. So when you have a move of 40% in 6 months, you can't hyperventilate when a market has a 4% move or 5% move, even a 10% move. It's abnormal for markets to not have pullbacks. And if I'm long cattle, that's probably the one thing I'm worried the most about. At some point, people go to the grocery store and say, you know what? I'm not paying 14 bucks for a strip steak anymore, or whatever it is they're paying now at the grocery store. At some point, people may just say, you know what? I've had enough. I'm gonna go get some chicken and some pork, and maybe some tuna fish. So that's always out there. We've been waiting for it for basically 5 years, ever since we started this explosive rally, which began in COVID. At some point we're going to correct. I don't know when. I wish I did. If I did, folks, I would not tell you. I would just be waiting and waiting and waiting. That way I could make enough money to buy my Pittsburgh Steelers. But sadly, I don't know when that's coming. I can help you protect the revenue gain, and we do that with hedges. If you want to learn more about that, call me directly. We can talk about the type of hedges that are out there and what those can do for you. So that's about it. Keep your eyes open. I'm going to be doing the private client webinar tonight. We're going to dig into what we're doing with the November options. We're going to dig into what I'm looking at for 2026 already. We're going to dig into also the whole idea of selling calls against bushels that you know you're going to store. So lots to cover. Have a good night. This is Chris Robinson, 312-638-8868. Give me a call. If you're not getting my letters, sign up.